you're calling out these other cryptos, Ethereum, and these other strategies that are being run in terms of these treasury companies. Yeah, why is that the case? Why is it that perhaps they can't coexist, or there's Bitcoin and then there's this other stuff? Like, why? It seems like
They already do exist, so they are coexisting by definition.
why is it necessary to like sort of maybe bring down some of the others? Like, why is that?
Well, no, it's a competition for capital and for mind share, and also just trying to educate, the investing public and Wall Street on what's real and what's not. So, you're in that respect, that's around treasury companies. Basically, the summer and fall has been a lot like 2017 to 2023, where we fought it out with shit coins for, in crypto casinos, right? That was like, you know, Swan and River and Strike and Unchained versus Coinbase for 6 years, and Fold, right? So in the treasury space, it's kind of similar, and they ran out kind of all the same narratives. And Lubin is out there, he doesn't actually believe the things that he's saying anymore because they've been proven wrong already, but he's trotting out, basically the same speeches and the same media appearances that he did in 2017, 18, 19. And they kind of stopped, right? You haven't really seen anybody claim that Ethereum is a store of value for years until this summer, because he needed to repump and try to reinflate the narrative briefly, or they were going to completely lose their kind of like semi peg range to Bitcoin, and it was just going to fall off a fucking cliff behind these Bitcoin treasury companies. So it wasn't even necessarily that the shitcoiners, mostly New York based, needed to do it for themselves or even saw it as that much of an opportunity. They just needed Bitcoin not to run away with it. And so even if there was no chance of the shats actually succeeding, which is the case, they needed to go and shit in the pool and pollute it and fuck it up for everybody else. Otherwise, Bitcoin was just going to run away with it. So if you think about like the value of the massive stack of self-gifted pre-mined shitcoins that these guys have, they needed to actually destroy the Bitcoin treasury narrative as best, or dilute it as best as they possibly could. And that was basically the move that Lubin pulled off this summer, was to try to make sure that it got polluted and that the Wall Street companies all talked about it as DATs, and that these are Bitcoin DATs, and that it wasn't just a Bitcoin thing, and that these other things could be viable, underlying assets for treasury companies.
Yeah, I'm not too sure how Lubin's treasure. I think that might be SBET. How well that's doing.
Well, it's not just him; he's behind all of the Ethereum plays.
Okay, but yes, the Bitmine one that Tom is running. So Tom would make the case that Bitcoin is the store of value asset. Ethereum is focused on stable coins and will essentially be the rails or the blockchain that Wall Street moves on to. Whether that all happens to the scale which he talks about, I don't know. But that's an interesting idea, number one. And number
Let me
two,
ask you something.
there's a relation between those.
What are the fees? What is the difference in the fee for a $1 ETH transaction versus a $10 billion ETH transaction? What's the difference in the fees between those two transactions?
I don't know the exact fee rate, but by the way you're asking the question, I'd imagine they're
They're
relative.
the same. It's just a transaction.
Yeah, exactly.
It's just the gas fee for a transaction. So having volume like settle between financial institutions that have their own ledgers on what they might call a layer two or whatever, even if they do settle on Ethereum for some reason, that doesn't accrue any value to the Ethereum token. And there's almost no volume on ETH versus Tron. And in a couple of years, as you see the volume of stablecoins take off on all these private chains and all these corporate chains, whether it's Stripe, JP Morgan, like whatever, Tether's launched two more kind of like, backing two more cheap stablecoin focused chains. Like none of this shit's going to happen on Ethereum, and whatever little that does is not going to accrue value to the token. Again, there's no reason to hold value in something that decays in value versus Bitcoin. Even if you give a yield in a shitcoin, if the shitcoin is going down so much versus Bitcoin over time, like who cares that you have 22% more meth coins than you do when they launched proof of stake back in 2022, you're still down over 50% versus Bitcoin, even including the 22% yield in the shitcoin.
Yeah, I think the case Tom would probably make though is that they it's not that Wall Street would want to hold the tokens in terms of looking for an investment return, but it's actually if they're going to use the Ethereum blockchain, that they would want to hold the tokens to help secure the network and to have a stake in the thing that they're running their operations on, right?
They don't need it. They don't need it. And they can just use their money to influence somebody else that holds some tokens. Like there's no reason to hold a bunch of shit that's like decaying in value, for supposed like network governance. It's they can influence those people that have network governance through other means just by paying them a little bit of extra money to vote a certain way. You don't need to hold the tokens to influence the governance of a shitcoin.
But someone would need to hold the tokens. The people that they're paying.
Yeah, but that if they are not holding their value versus the hurdle rate, the thing you're most compared to, which is Bitcoin, then there's no reason to store your value in meth.
Yeah, it's a good point, and I too believe Bitcoin is the hurdle rate, but I don't know if Wall Street thinks like that because if that's the case, why aren't they all in on Wall Street? Why aren't they all in on Bitcoin? It's a 2.5
Because they've been subjected to so much fucking shitcoin marketing for so long. And because all those companies, Circle, Coinbase, Ethereum, they're all in New York, meeting with Ripple, they're all in New York and DC, constantly spreading money. And they have way more money than Bitcoin companies because they got to print it out of thin air. And your success as a shitcoin marketer is like, how long can you keep your token valued above zero? Which is why Ripple is actually like by far the most successful shitcoin company in history.
But why would any of this change, right? If this is what has played out, aren't these people only going to get bigger and stronger? Like, why would even if you're right that Bitcoin is the true hurdle rate, that none of these assets compare to it in terms of its value, and that all these other coins will go down in Bitcoin denominated terms. If socially, this is the way things are structured, and if they could just keep printing this money out of thin air, like why would anything change?
Well, they can't get away with printing a lot of the existing ones out of thin air. They're kind of stuck with what they got, which is why like the long tail monetization of their shitcoin piles is like so valuable because they can't get away. Consensus and the Ethereum Foundation can't get away with printing a bunch of new Ethereum for themselves. It was a one-time gift they granted to themselves. So they don't have endless resources. So it is important to them to try to keep the price up as much as they can so they can continue to like dump on their retail suckers and monetize that over time like Ripple does.
Okay.
So I think all you have to do is just let time pass and the charts continue to show these things declining in Bitcoin terms, right? I mean, there's out of 30 million altcoins, there's only been two that have ever had a second all-time high in Bitcoin terms. So really just like the market handles it over time. Like Ripple was higher in 2017 than 2013. Doge was higher in 21 than 2017. Both of them are down over 80% in Bitcoin terms since those highs. That's the magic of altcoins. You can count on them basically never having a new all-time high in Bitcoin terms. They always get one pump. Let me tell you the bull case for crypto, blockchain, DeFi, NFT, whatever. The absolute most bullish scenario is that they bring some incremental improvement to financial IT. And I think that's happening. Like sequencers and private keys and consortia and 24/7, cheap settlement times and being able to send dollars and stocks around the world, kind of instantly and near for free. Like that stuff is all valuable and it's all pretty cool. And State Street is a pretty valuable company for custodying, tens of trillions of dollars worth of stocks and bonds, right? They don't get all the value of the things traded on their rails, but they get some value for making that easier and better. So I think that will be interesting, and I think it's cool. And I think having tokenized Apple stock and tokenized Stretch and tokenized bonds and tokenized treasuries, like that is actually what will save crypto DeFi, because the way that they're writing the legislation, the way that Coinbase is currently writing the legislation that their legislators will then pass is they're saying you KYC on the way in, and then it can trade all over the world on crypto platforms and DeFi platforms, and it only gets KYC'd again on the way out when you sell the token for cash or exchange it, right? And you ask any of these crypto traders, crypto hedge funds, like, do they want assets that the underlying decays in value over time, like shitcoins, or would they rather have something that's like a stock or a bond or something? Like, would they rather have Stretch that's just tokenized and has 10% yield backed by Saylor's Bitcoin pile? They'd much rather have something that's like automatically guaranteed to appreciate 10% per year compounding as the basis for all of this lending and borrowing and leverage activity that basically is what DeFi is for. That's a lot better than having to do it with Ethereum or some other shitcoin as the basis for it, that has no reason for being and no thesis. So I think that's basically what will happen. I think that all of crypto blockchain will basically get saved by the tokenization of real world assets.
Yeah, that's a big market though, right? And a really big use case. And Bitcoin isn't competing for that, right? And so, yeah, I think Bitcoin is definitely the store value asset. Most things, if not everything, will go down over time when price of Bitcoin. But I do think there are some other good use cases for some of these other tokens, and I don't think
not the tokens, because it's always going to be cheaper and faster the more centralized it is, and so the tokens are just kind of extraneous and not necessary for it. It all basically ends up just running on centralized databases over time. Like, would you rather trust fucking Tron or Google? Who's more trustworthy, Google or Justin Sun?
I don't know. But
I guarantee you, I know how everyone on Wall Street and High Street is going to answer that question. It's Google, not Justin Sun.
Yeah, of course. Yeah, so value in some of these other blockchains, I think with those blockchains being valuable, there could potentially be some of this value creation in terms of their tokens as well over time. I think that's
disagree, but I think that the tech can be useful, but not the tokens.
Okay. Well, yeah, we'll check back in on this. I love the I love the debate and the discussion.